Yesterday was a bear channel and a bull trend, and therefore a bull flag. And today we're again gapping up to new all-time high. We're getting near the big round number, 2,500. Here's the day session chart. It's still a parabolic wedge, and it still looks like it's trying to transition into a trading range, but we're still making new highs. New high here, new high here, new high here. Starting to get some bear bars. 4 of the past 5 days bear bars. Tomorrow's the last day of the week, and so far we have a bull bar closing on its high. No sign of a top, despite how overbought the weekly chart is. And the monthly chart, we're accelerating upward. We had a weak rally, and now we're trying to get a bull breakout above that weak rally. Again, no sign of a top, but a parabolic wedge rally. 1 pullback, 2 pullback, 3. So, you have to be concerned that we're probably not going to go much higher. However, look at this. This went on for several years, and therefore this could go on for several years as well. I just think the probability is against it. All right, so yesterday we reversed down on the open. The day before we reversed down on the open. So traders are starting to use new highs for profit taking. We've had reversal down. So we're starting to get some early selling, reversal down. And the bulls, for the most part, have been able to reverse back up after the initial sell-off. But once we've converted into a bear leg in probably a trading range lasting several months, we will not get the bull reversals. The market will sell off and then just continue to sell off all day. And then it'll sell off the next day, and everyone will say, wow, that's funny, it hasn't been doing that. All right, so the same with this bar as with yesterday. When you get a reversal down, you get about a 25% chance of this being the high of the day. If the bar becomes very big, it's already relatively big. I mean, you look at it and say, oh, it's only 2 points tall. Well, it's relatively big compared to the bars on the left. The bigger it gets, the less willing bulls are to sell below its low. If it has a bear close like yesterday, and there's room for a scalp down to the moving average, a lot of bears will quickly sell the close looking for a scalp. 60-minute chart, 3 pushes up, 1, 2, 3. Possible final flag, so wedge and a final flag possibility. Yesterday, 25% chance the first bar was going to be the high of the day. Well, it was the high of the day. The day before, maybe 25% chance the first bar was the high of the day. The market went a tick or so above the high, but that was it. And traders see that, and it makes them a little bit more willing to sell, thinking that the upside risk is not all that great. Traders are selling at new highs. It went above this high, they sold. Above this high, they sold. We're going above a new high, and so far they've been selling. So instead of buying at new highs, which is what they do in strong bull trends, traders are starting to sell at new highs, which is what traders do when they think a bull trend is transitioning into a trading range. All right, so traders are looking at the close. If the tail is too big, traders do not sell the close. If it's near the low, traders will sell the close or below the bar. What's likely to happen? Are we likely to get a big bear trend? Look at the past month. Most days have had trading range opens, and therefore this will probably be a trading range open as well. Already different from yesterday, right? We've already gone 2 ticks above the close of bar 1. Yesterday, the open of bar 2 is above the close of 1. So a lot of traders bought the close of 1. Yesterday, the open of bar 2 was below the close of 1. So traders sold the close of 1. So this is behaving differently from what it did yesterday. It's subtle, but I think it's significant. You can see it fell far enough down for the sell the closed bears to get a 1-point scalp, and then it's bouncing back up. So, just like the bulls did not buy above yesterday's high, the bears are scalping. They've looked at the charts and they know that most of the days over the past month have had trading range opens, that the rallies did not last long. Here we gapped up, immediately sold off, and the sell-offs did not last long either. And like all the past days, the bulls are hoping that we get a reversal up. If the reversal occurs here after a very small sell-off, the bulls would have a chance of a big bull trend day. If the reversal occurs after a big sell-off like yesterday, usually the market ends up in a trading range. Here, reversal after a lot of bars down and a lot of points down. It had a swing up, but it stayed in a trading range. Let me turn the screen off for a minute. See what this notification is. Well, the bulls opening reversal up, but there's a problem with it. And I don't know if you can see it. It's reversing up from above the moving average, probably a little too far above the moving average. And that usually limits the upside. If you're getting an opening reversal and from the moving average, you want it to get to the moving average or get very close to the moving average. And this is, I think, not close enough. Right now the market is fighting over the close of bar 2. Will it be a strong buy signal bar, bull bar, in which case opening reversal bulls will buy it, or will it have a bear body, in which case the market probably will have sellers above 2. Remember I said there was a problem with the open of bar 2. It's 1 tick above the close of bar 1, and that means that there were buyers on the close of bar 1. They were ultimately overwhelmed by the sellers, but that is, even though we have consecutive bear bars, it's not nearly as bearish as it could be. The close of 2 is above the low of 1. Probably sellers above 1, and sellers above 2, and probably sellers above 1 as well. If we go above 1, traders will look for a reversal down for a second failed breakout of yesterday's high. This kind of thing. Reversal down, reversal down. Reversal down from above yesterday's high. Then we have a new high and a second reversal down. And you often get a bear trend from that. I think we're always in short. But I also think that most of the bars over the past month have had trading ranges for the first hour. And that we'll probably get that again today. Not a good buy signal bar. For the bulls, opening reversal, but too far above the moving average, and not particularly strong 2-bar reversal. I think we're always in short. I think there are sellers above 2 and sellers above 1. But I also think this is there's a lack of urgency up or down, and therefore this is probably going to be another trading range open. Whenever I see these opening reversals that don't look quite right, in this case a bull opening reversal, I always prefer the market to go above 1, and then it creates the possibility of a second reversal down, where the second one is from a higher price, and that has, in general, if you get a decent sell signal bar, it has at least a 50% chance of a profitable trade down, often a swing. Very slow motion open. The limit order bears closed with 1, made money, but the limit order bulls at the 1 low have not yet made money, right? And here we are 10 minutes later, 12 minutes later, and we're above their entry price, the 1 low, but and it's not going up enough. Actually, did it go up enough? I think on bar 2, I think it went up and then down. So so the limit order bulls from the 1 low have not yet made money. Do you feel like you're waiting for something? Right? That tells you that there's no urgency. There's no sense of, oh my gosh, I got to hurry up and buy, or I have to hurry up and sell. It's more, I don't know what it's going to do. It may go up, it may go down. Trading range open, limit order market. Not strong sell signal. We have a reversal down and a pullback from the reversal, bar 3, but a bull body. Not a lot of traders willing to take that short. Bears trying. Bulls will try to get an opening reversal up from the moving average. By simply going sideways, the market's getting closer to the moving average, because every bar that we add here is above the average price, and it replaces a bar below the average price, and therefore simply going sideways raises the average price. Yesterday was such a small range day that today could easily go outside down. We're already halfway down to yesterday's low from today's high. So here's today's high, there's yesterday's low, and here's halfway. So we're already more than halfway there. For the bulls, they're hoping trading range open, and therefore they buy below a prior low. They'll buy the 2 low. They're hoping for an opening reversal up from the moving average, therefore they'll buy the moving average. And for the bears, they want the day to convert into a clear bear trend, but they have to do more before traders believe that that this is a bear trend and not just part of a trading range open. Right now, the high of the day probably has maybe a 35% chance of remaining the high of the day. Every bar that gets added to the sell-off increases the chances that we've seen the high, maybe 40% chance that we've seen the high. Usually by the close of bar 7, there's a 50% chance we've seen either the high or low. Was it reasonable to buy the 3 low and buy more 1 point lower. I think it's reasonable, right? And that increases the chances that we're going to get back up to the 3 low, whether or not we sell off first. I did not buy the 3 low. I thought we were always in short. I was trying to sell above, and I did not get filled. The bulls want a high 2 buy, 2 and 5 or 6, but they have a problem. 4 did not get above 3, and that means a reversal up here would be weaker and less likely to be the low of the day. Now it's a 6-bar bear microchannel on the open that increases the chances that there'll be sellers above bar 6. For the bulls, opening reversal, 2 legs down to the moving average, but because 4 did not get above 3, a lot of the opening reversal bulls will wait to see if we start to go up strongly. Remember I said it was reasonable to buy the 3 low and 1 point lower. So right now I think we probably will get up to 1 tick above the 3 low. It's also reasonable to buy the 2 low and to buy the moving average. So the limit order bulls who took those buys probably will make money. Stop order bulls for the opening reversal. Normally I like to take a 2-legged pullback to the moving average for an opening reversal and possible low of the day, but I prefer it to be an actual high 2 buy, and this is kind of an inferred high 2 buy. It's a high 2 on a smaller time frame chart, maybe a 3-minute chart. 3-minute, the high 1 triggered, so this is a high 2. But I'm trading the 5-minute chart, and it's only an implied high 2. It's really a trend from the open bear trend, and therefore I'm probably not going to buy above 6 unless something very dramatic happens and it becomes super strong by the end of the bar. I mentioned how unusual, I'll talk about it in a second. Let's let this bar close. Final seconds, how bullish can the bulls make it? I think not bullish enough. It's a 6-bar trend from the open bear trend, even though we have a couple of bull bars. I think not a lot of bulls will buy above 6. And bad follow through in the sell-off. After bar 1 we have a tail and a bull bar. After bar 5 we have a bull bar. This is probably going to be a bear leg in what will become a trading range. Not a good high 2, but maybe we'll get a wedge bottom. Tried to get a high 2 here. The high 1 triggered. That gives this a better chance of a rally. Here we got a wedge with maybe 4 pushes down before the reversal. Here, high 3, high 1, high 2, high 3, but a decent buy signal bar. Tight channel, probably a minor reversal, and the bulls probably would need some kind of a double bottom, which they got over here. A parabolic wedge sell-off on the open, but a very good buy signal bar. Right now I think there's a 50-50 chance today is going to be an outside day and trade down below yesterday's low at some point today. Micro double bottom. Any reversal up can be the low of the day, but since this is a 6-bar bear micro channel, probably the best the bulls get is a minor reversal and maybe a test of the sell climax high, which is around yesterday's high as well. So I'm not sure that it's worth a stop entry buy. And for the bears, they see the bad follow through, and that makes them hesitant to sell low. Sell the 3 close, this is what you sell the 5 close, this is what you get, right? So the bears prefer to sell higher. Bulls, we have a bull inside bar 6. Can you take the buy? Well, for a swing, you can take a chance, but I think the probability is lower than what you would expect because it's a bear micro channel and we did not get a move above the 3 high. Probably too low for a lot of bears to sell and probably too high for a lot of bulls to buy. Remember I said that I thought we'd get 1 tick above the 4 low because limit order bulls probably bought there. And it was reasonable for them to take that buy. You can see there are sellers at I said 4 low, I meant 3 low. You can see we got there and we're getting sellers. Some of the bulls who bought the 3 low are disappointed by the size of the sell-off, and instead of trying to get out at the 3 low, which means 1 tick, it has to go 1 tick higher, some of them are willing to take a 1 tick loss on their first entry, and they place a limit order to get out 1 tick below the 3 low. So they buy the 3 low, they buy more 1 point lower, and some of them will try to get out at the 3 low. Others will decide it's just 6-bar bear micro channel, pretty good bear bars 1 and 5. I'll take a 1 tick loss on the first entry at the 3 low and a 3 tick profit on the second entry 1 point lower. We're also 5 ticks above the 2 low. So that tells you that the bulls who bought the 2 low are scalping. You can see it had to go up 5 ticks, which it did, and then it pulled back. And that means traders are selling, and probably a lot of those sellers are bulls scalping out. What about stop order bears selling below 7, double top with 3? We're right at the moving average, and we're trying to get an opening reversal. Their bulls made money buying below 2, so I think not a lot of bears are going to sell below 7. What about selling below 8 if it's a bear inside bar? You can do it for a swing, but this does not look like the start of a big bear trend. It looks like a trading range open, and selling low is a low probability bet. For the bears, double top, lower high with 3, but not a strong sell-off and right at support. Will bulls buy below 9? If it closes on its low, they will not. And if it has a bull body, they might. Trying to get up to the sell climax high, the 5 high. Bulls holding up. The 6 closes above the 5 close. 7 closes above 6. 8 closes above 7. So it's one of those subtle early trends, an endless pullback. Still always in short, but not strongly bearish, so would not take much for traders to switch to long. Swing bulls, they're long. They're hoping 6, even
Your
with
deal
that.
is confirmed.
Sorry about that. I have orders going on the other computer. Anyway, even with that tail, it still could be the low of the day. We had a similar situation here. Leg 1 pulled back leg 2 to the moving average. A 2-tick tail became the low of the day. Here we went above bar 3, so slightly stronger bulls. Today we had a 6-bar bear microchannel, so this is less strong.
Your order has been placed.
The bear's still hoping for the double top, and bulls want the opening reversal. A little while ago, I was starting to talk about something. I was going to talk about the Boeing chart, which is really, incredible. Huge gap up, huge rally, and then huge follow through. For a company as big as Boeing, you have to look at this and say, how could they be so wrong about the price of the stock? It's not like Boeing is some small company that no one understands. Everyone understands Boeing extremely well. But how could all the analysts be so wrong about where the price belongs? Really, it's shocking to me that that they're getting it that wrong. Here's the weekly chart and the monthly chart. The problem Boeing has right now is it's the biggest bull trend bar late in a bull trend, and therefore more likely an exhaustive buy climax. But when the bar is that big, usually the bears need at least a micro double top. So the near term risk is this, it's unlikely to go down very much without first going sideways. Same thing with the weekly chart. Extreme buying, the biggest bar in more than 20 bars, the biggest bar in 100 bars, right? Biggest bar in the chart. Late in a bull trend, probably exhaustion, but not much downside risk, because when a bar is that strong, the odds are traders will buy the first pullback, which means the bears will need at least a micro double top. Daily chart, same thing. Extreme buy climax. I don't have a channel drawn in, but you can see we're getting a bull breakout above a bull channel. If you draw the channel this way, we're far above it. We're above it if we draw it that way. Both of those are reasonable channels. Whenever you have a bull breakout above a bull channel, 75% chance it's going to reverse down within about 5 bars. However, when a breakout is as big as this, I think it's more likely that the best the bears get is sideways over the next 10 bars or so. I doubt we're going to go up much higher. This is so extreme, but it really is so surprising that the analysts could be this wrong. They know how many planes, they can see the planes leaving the Boeing manufacturing plants. They know how many planes are being sold. They know how many orders there are. They know how much the price of the planes are. They have a very good idea how much it costs to build the planes because there's a big track record. Yet with all of that information, the analysts are this wrong. It's really, it's incredible. Are we always in long yet? Well, I don't know. I think we probably need at least another bar or two. We still have the possibility of a double top with the 3 high. Since we're probably not convincingly always in long yet, can you simply sell here and put a stop maybe a couple ticks above 5? I would not. I would wait. And as far as buying up here goes, I compared it to this day, 2 legs down to the moving average, 2 legs down to the moving average. There we had a very strong reversal up, and the market became always in long at that point. Plus we had a clear high 1, high 2. So to me, this is by the close. This is not as clear. The high 1 did not trigger, and we do not have a give up bar. The bear is giving up. Getting near to the end of the first hour, and similar to over here, an early sell-off, but closing back up in the middle. Yesterday, early sell-off, closing back in the middle. Early sell-off, closing back up in the middle of the bar. Probably always in long if it closes here. Will it be a big bull trend day, or is this more big up after, well, we have a big up, gap up, big down, big up, probably always in long. Looks like more likely a trading range day. If traders buy the close, they need to stop below 6. Otherwise, traders will look to buy a pullback, or if we start to get bigger bars, they'll buy closes. I think we're always in long at this point. But I also think the odds are against a big bull trend day. For the bears, is it a lower high major trend reversal? No. It's, if anything, it's a second failed breakout yesterday's high. There's really no trend. It's a trading range, so you can argue small trend. This is a lower high major trend reversal. But I think it's more of a bull leg and a trading range day. Buyers or sellers below 13, probably buyers below. It's still possible that it could be a strong bull trend day. It's less likely that it's going to be a strong bear trend day. The bears should not have allowed 7 bars without a bear body where every close is at or above the close of the prior bar. Even though we did not go up a lot of points, there's a trend, a clear trend, a micro channel with every close being higher. Buy the closed bulls, stop below 7. They probably have to be willing to scale in because a trading range is more likely than a bull trend, and a trading range means we might get a deep pullback. Was it reasonable for bears to sell the 6 high, a 6 bar bear micro channel? I personally would not do it, but maybe it's borderline reasonable. So maybe the bulls will get a pullback down to the 6 high. You can see over here, I thought this was a better buy setup, and we did get a reversal, but did not get all the way down to the buy signal bar high. It missed it by 3 ticks. The euro chart, I think, looks really interesting. You can read my post this morning about it. This is the daily chart of the euro versus the dollar. There are a whole bunch of things going on. Spike, pullback channel, spike, pullback channel, spike, pullback channel, parabolic wedge, bad follow through after the bull bars, usually happens if a market is trying to transition into a trading range. And say you have a small expanding triangle top on a smaller time frame chart. And if this bar closes like this, I think it's a pretty good setup for the bears. We might do this, right, and then go higher. But, we're testing the 7-year, this is the monthly chart, we're testing the bottom of the 7-year trading range. We're getting close to a gap here. We have a failed breakout above this range. 5 bull bars on the monthly chart, 4 of them very strong. If we do get a reversal over the next month or two, the bulls will buy it, a minor reversal. However, on the daily chart, whenever you have a spike pullback channel, the market often works its way all the way down to the bottom of the channel, which is 400 pips down. For the bulls, I got out of my longs, I forgot where, a week or so ago, and I sold today, and I'll watch it. Obviously, if we race to the upside, I'll take the loss, but we'll probably trade down at least some. We have a gap here, first target. We may get all the way down here over the next few months. Another close above the close of the prior bar. Can you buy on a stop above 1? Well, I don't know. We got a gap up, big move up, big move down, big move up. 3 legs in the first 14 bars. You have to be suspicious that there might be sellers above 1. So I'd rather buy closes or buy pullbacks than buy above 1. Too much risk that the market will do this, get above the high. So you got 2 legs down, 1 pullback, 2 legs down, 1 pullback, 2. A break to a new high, strong break, and sellers at that high. So I think too much risk of sellers at that high. We did not reverse down. We went sideways for 30 bars, 20 bars, and then ultimately reversed down. But traders have been selling above bars. They sold at that high, right? They sold at this high. And, the market, I look to the left and see what kind of behavior the market has been doing, and it has not been a good idea buying at a new high. I would not sell yet. Every close is at or above the close of the prior bar. So even though we're not going up a lot of points, this is a bullish, it's a bullish pattern. Traders are so eager to buy that they're not waiting for pullbacks. They're buying every close. Bulls stop below 6. Probably buyers below. This happens fairly commonly. We ever buy the closed trend, and then you get a reversal. The market then decides if the reversal is going to lead to a trading range, in other words, a deep pullback, or will it be a brief bull flag in a bull trend. By the close, and if you see a deep pullback, the day ends up as a trading range day. If you see just a small pullback, then you can get a bull trend. Very strong rally, deep pullback, probably a trading range day. Strong rally, deep pullback, trading range day. Strong rally, deep pullback, probably trading range day. So the size of the pullback is important. However, in every one of those instances, traders who bought that close, if they bought more above the bull bar, they were able to avoid a loss or make a profit. So even if you bought that worst close and you bought more here, it got back up there. Same thing. Even if you bought the absolute worst place, if you used the correct stop and added on here, you could get out break even between the two entries, or in this case, it went up far enough to get out break even on your first entry and with a profit on your second entry. Can you sell for the lower high? I personally would not. I would either be long or I'd be buying below bars, like right here, or waiting to buy a deeper pullback. We may enter a tight trading range here in those deep pullback examples. Sometimes we got this, right, and we might be doing that now. If you get that, then bears might sell above bars, especially, I don't know if you can see. It went sideways in a tight range, high 1, high 2, but a bear bar. And so a lot of bears were willing to take a chance. Disappointing follow through. A lot of the buy the close bulls here tried to get out here, could not, and they tried to get out again. A lot of the bears sold here, betting that the buy the close bulls here would fail again, and that would get a reversal down. So a high 2, but a bear bar after disappointing follow through. That makes bears willing to try to short. High 1, buy, but near the top of what probably will be a trading range, and I think a lot of bulls will not buy above 15, so there may be sellers above, and we may start to enter a tight range here. We have a couple gaps. We have one gap here, and we're already at that measured move target. And then we have another gap here, and then another gap here. This one's more meaningful because we tried to reverse down, and it became a breakout test of the 13 high. So that is a reasonable setup for a measured move up, which takes us a tick above the high of the day. Again, everything is small. If you ignore the price scale, everything looks good. But when you slide over and look at the pricing scale, you say, well, wait a minute, we're only up a few points, and these bars are only 2 or 3 ticks tall. Limit order bulls 14, low have not yet made money. Buy the close bulls 12 have not yet made money, and here we are 4 bars into the trend. If today is a bull trend day, right now the odds are it'll not be a big bull trend day. It'll be a reversal type day where you can rally all day but not really make a lot of progress. Big sell-off, much bigger than today, and we could not get above the high. And the opposite extreme is when you get an opening reversal with a sell-off that's not all that big, then you have a better chance of a big bull trend day. Today is more or less in the middle. The sell-off is, well, I don't have an example. The sell-off is not all that deep, but it's deep enough, I think, to indicate that the bears are reasonably strong. So it's probably like those buy the close deep pullback examples that I showed. Like this. Rally, deep pullback, probably a trading range. Here, we sold off on the open, rally to a new high. So this is kind of like today, except this had, I think, more trading range price action than today, but the idea is the same. 2 legs down on the open, strong rally, but it became a trading range day. Even though we closed near the high of the day, it was still mostly a trading range day. Again, 2 legs down on the open, like today, strong rally, like today, but even though we never got back down to the low, the best the bulls could get was sideways to up, and I think today will be like that as well. Bears, second entry sell, micro double top, and a lower high, but very tight bull channel, and therefore the math is not all that good selling below. What's the chance that you're going to get that? These don't happen very often. Once a month you get that kind of a abrupt reversal after such a strong rally. We've already reversed up. We sold off, we reversed up, and then now we're reversing down. Same thing, strong rally, deep pullback, but held above the bottom of the bull trend, and the result was a trading range. So always in long, but the bear bars 1 and 5, I think reduce the chances that this will be a big bull trend day. Odds are minor reversal, maybe a pullback to the 5 high and moving average. Still always in long. What's more likely, 6 remaining the low of the day or 1 remaining the high of the day? Well, we're always in long, so it's more likely that we'll go up, and therefore it's more likely that 6 will remain the low of the day. What do the bulls do? Do they get out below 17, a second entry short, and near the top of a trading range day? I think it's okay to get out. The rally, even though it has a lot of bull bars, it's not all that strong. And as far as the bears go, I don't think it's worth taking the short. The pullbacks have been too small, and we still have targets above the high of the day and that measured move target. What happens, this is the 18th bar. At the close of the 18th bar, there's a 90% chance we've seen either the high or low of the day. What happens if we break out above 1? I think probably sellers above. Traders have been selling new highs for the past couple of days. You can see what I'm saying here, tight trading range, probably a minor reversal and a small second leg up. Much smaller chance that we just reverse down strongly, but you can see how it generates confusion, right? So big up, big down, big up again. Bears want big down again. I don't want too many lines. Get rid of that. More likely minor reversal and buyers below, buyers at the moving average. They bought the moving average here. So buyers 18 low, 15 low, moving average, and 5 high. And the bears know that, and they're trying to get one of these big reversals down, but the odds are against it. And even if they do, the bulls will buy the reversal down. They'll put their stop down here. Remember, by the close of bar 18, 90% chance we've seen either the high or low of the day. And the bears know that. They'll sell here thinking, oh, the stop is right here. Maybe 30% chance, 40% chance we've seen the high of the day. I'm only risking a couple points and to make, maybe 6 points on the downside. So the math is okay for the bears to sell that reversal. They know the probability is they're going to lose. but the math is still okay for them to take that short. What happens if we break below 6? Well, the same as if we break above 1. Trading range day, more likely after big reversals like this. So, probably more buyers at the 6 low and sellers at the 1 high. Remember I said that bar 6 was a 6-bar bear micro channel and therefore a lower probability buy, and therefore scale and bears would sell above 6, maybe sell more below a bear bar on 17. And that might be what's going on here, right? So the bears are trying to get down to that 6 high where they can get out break even on their entry. Bulls bought the moving average here. They're buying here as well. Also 4 ticks below the 15 low. You have limit order bulls who buy the, 17 low. Limit order bulls buy the 17 low, buy more 1 point lower, expecting it to get back up above that 17 low. So reasonable for the bulls to be buying. And for the bears, I would not be selling here. If you were selling below 17, taking a chance that you either get a scalp or that we get all the way down to the 6 high, or that we break below 6 and have a trend down, which is not likely. Is 19 a give up bar like 12? I don't think so. I think it's more likely a pullback. I thought it was likely that we'd pull back. And it's not so big to make me think that the bears have taken control. It's big enough to make me think we have to go sideways for a few more bars. And therefore, a lot of bulls will not buy above 20. You have the limit order bulls from the 14 low or from the 16 low, probably more from the 14 low, buying more 1 point lower, and that's what's causing that. And they're trying to get back to the 14 low. And the bears will try to stop them. And you also have other bears who sold the 6 high and sold more below 17. They're selling more here, trying to get the market down here. So you got reasonable arguments, bulls and bears. What usually happens? Sideways. So probably sideways for a few bars. The bears want to get lower. My guess is we're going to go sideways here. You have limit order bulls trying to sell right here at the 16 low. Bars trying to get small up here, 14, 15, 16, 17, 18, and then again here. So it looks like we're going to enter a tight trading range here. Still always in long, and the odds of this are small. More likely it's going to behave like a reversal day. A reversal day where you go down, you go up, and you stay sideways with maybe a slight bullish bias. So not a buy the close with a deep pullback. More likely a reversal day where you go up, and then for the rest of the day you have a slight upward bias but not a strong bull trend. Similar to this, sideways. Here it's mostly sideways, but a lot of them it's sideways to up, but not a big bull trend day. limit order bulls 14 low, who bought there and 1 point lower, still trapped out. And limit order bears, who sold the 6 high and who did not get out, are selling more here, trying to get it down to that 6 high. Probably limit order market, probably buyers at the moving average, but they did not get up high enough for a 1 point scalp, and probably sellers at the 20 high, trying to get down to the 6 low. Breakout mode, high of the day, low of the day. The first 18 bars, here's the 18th bar, so it's a breakout mode day. Theoretically, buyers above the high, sellers below the low. If we get above the high, 90% chance we will not get below the low. If we get below the low, 90% chance we will not get above the high. But when you have a lot of trading range price action ahead of the breakout, usually the breakout does not result in a trend. Usually traders will bet against the breakout and you get a reversal instead of a big trend. However, if you get the breakout, you have a good location for your stop. 90% chance the market will not get to the opposite side of the day. How do you trade this? Well, you can sell the 20 high, too late for that. And you can buy for any reason. You can buy 1 point below 16, or you can buy around the 6 high, or you can buy a second reversal up. If we go sideways here and get a double bottom bull flag, that would be a buy. If we go down here and form a higher low with a bull bar, traders will buy above that bull bar. Market's deciding if this support will hold, moving average 1 point below 14, or if we have to get down to the next support level, the 6 high, or the final support level, the low of the day. Down to the buy zone, 1 point below 14, and then testing the 6 high. For the bulls, breakout test 6 high and a wedge, 3 pushes down, 15, 20. For me, I'm scalping, so I'm not willing to take the swing trade. I think it's more likely a trading range. What do you do right here? I think it's a bad location to do anything. We're still always in long, but it's a limit order market, so traders are trying to buy below bars, below 14, below 15, below 20, and then scalping probably for 1 point with the range this small. We're still always in long, and 24 is a test of the 6 high, the breakout test. But I think most bulls are scalping. And for the bears, they have a lower high and a second entry short below 17. And now they have a double top bear flag 21, 25. But I think we're always in long, and it's probably too low down for me to short with a stop below 26. Yesterday we reversed down. We had a double top bear flag, and the bears did get a sell-off. I think it's pretty difficult to do anything right here. We have a target 5 ticks above where we are. I still think the odds are we're going to a new high of the day. The range right now is about 4.75 points, less than 5 points. And when that happens, and if we're still early in the day like this, 95% chance the range is going to get bigger. It gets bigger by either going above the high or below the low. Because we're always in long, it's more likely that we go above the high. However, because of all the trading range price action today and over most days of the past month, the odds are this is not going to go above the high and rally for a measured move up. More likely we'll go above the high and fail, because that's also been what we've been doing the past few days. A similar day, 2 legs down, new high, failed. Tried to get above the high again, failed. Tried to get above these highs, failed. Tried to get above these highs, failed. So traders have been more aggressively selling at and around prior highs, and that reduces the chances that we're going to get a strong bull trend day and a measured move up. There's always a chance that we go to a new high and then a new low. Kind of like an expanding triangle. Here's a perfect expanding triangle. It's nested, higher, lower, and then inside of a bigger one. Here's another one. Higher, high, lower, low. Another one. Traditional types of expanding triangles. But, here's one in the open. We tried to reverse up twice from yesterday's low, failed, and we got a third reversal up. You can call it a wedge or an expanding triangle. But this is kind of the thing that I'm talking about, where you got a trading range for the first, couple of hours. You break to a new high, and it reverses a second time, and then gets down near the low of the day. Here it held above the low. Here, same kind of thing, a new high of the day, new low of the day. Does not look like an expanding triangle, but it functions like one. It's a sideways trading range, and we have a new high, a new low, and a third push up here, so it's an expanding triangle at this point. Same kind of a thing. After the first bar, we reversed up from a new low, reversed down from a new high, so breakout mode. The bears theoretically sell below there, but then we end up getting a new high of the day. So, I sometimes call it a mini new high and low type day, but it's really, anytime you have a horizontal pattern and you get repeated highs and lows, it functions essentially like an expanding triangle. So, probably sellers at the new high. And today, if we go above the new high and then below the new low, probably buyers below the new low. So probably sellers above the high, buyers below the low. But if we do get above the high, which is likely, 90% chance we will not get down to the low. I'm bringing up the possibility of doing both because today's range is so small, and it therefore has a higher chance of getting both a new high and a new low. I mentioned that I sold the euro today, and so far it's looking pretty good. I have about 50 pips profit already, so I'll probably take a little bit off. But I'm hoping that it's the start of a swing down on the daily chart. Let me go back to that chart. You know, we have a spike pullback channel. The bottom of the most recent buy climax is a target. Here's another buy climax target. And I think we'll get down here, which is 400 pips below the high, but it'll probably take 2 or 3 months to get there. And we'll probably do a lot of this first. Weekly chart, you can see parabolic wedge, 1 pullback, 2 pullback, 3. Failed breakout above the top of the range. Monthly chart, 4 consecutive good bull bars. Almost certainly the first reversal down will fail. Bulls will buy it. And we're testing the bottom of this 7-year range, and we're above the bottom of the, I guess it's about a 15-year range going back here. So sideways from here to here, so it's about 12 years, and then try to get a head and shoulders bottom bull flag here, but got a bear breakout. And this is about a 7-year range, so a 7-year range and a 12-year range. This is the monthly euro versus the dollar chart. Look at the bars, 2 ticks, 2 ticks, 2 ticks tall, 3 ticks tall. Not a lot of energy. Still always in long, but when the bars are small like this, as they were yesterday, the odds are against this becoming a big bull trend day. Can it be a small pullback bull trend day and just trend up all day? I don't think that's likely. The bars are just way too small. So I think more likely it'll be like all of those other reversal days that we've had, where this is the expanding triangle thing, but where we have a bullish bias, but not a big bull trend. Probably a new high of the day, but probably not a strong breakout and measured move up. With Boeing, although I didn't say it, I think I may have implied it. This is a bull breakout above a bull channel. Very strongly up, unlikely to get a reversal. However, this is so climactic that ask yourself, who's buying here? Are these bulls buying because they think the market's cheap? No, the bulls who think the market is cheap are the bulls who bought down here, right, when the price was low. But bulls are obviously buying, right? Bulls and bears are buying. What bulls are buying up here? It's bulls who are buying because the market's going up. They are momentum bulls, not value traders. Value traders buy when they think the market is cheap, and they buy more when it gets cheaper. Momentum traders buy when the market is going up, betting it's going to go higher, and as soon as it stops going up, they sell. So this is momentum momentum buyers giving up, and then value bulls are buying, right? The value bulls, they're never going to give up, right? They'll just keep buying more and more as it gets cheaper. It is not cheap now. So the value bulls are not buying up here. They want to buy pullbacks down to support moving averages. The traders buying up here, the bulls buying up here are buying simply because it's going up, and they're hoping it goes up higher quickly, and then they'll sell to take profits. And then the other traders who are buying here are the bears who sold thinking that maybe it was a buy climax, maybe it was the top of the channel, maybe we'll pull back, and those bears are having to cover. There are always, every stock has a certain number of shorts that, a really strong stock might only have 5 or 10% of all shares being held short. Other stocks might have 30 or 40% of all shares being held by shorts. So there are always traders who are short. And when the breakout was this big, the shorts started covering. They know it's probably not going up a heck of a lot higher, but they also know that the breakout is so big, it's probably not going to go down for a lot of bars. And therefore they buy back their shorts on the open as it's going up, and they'll look to sell again later. But this is such a strong breakout, they doubt that we're going to get much of a reversal for a lot of bars. We might get a pullback down to the gap, down to here over the next month or two, but the downside is probably not very big for at least several months. And they're afraid that we can get a second leg up, and therefore it's better to get out of their shorts. The point I'm making is the value bulls are not buying. The momentum bulls are only buying because it's going up strongly. When it stops going up strongly, like today, it might be the end of the strong rally, the momentum bulls stop buying. And then, so the strong bulls are not buying, they buy value. The momentum bulls are not buying, so the bulls are not buying. And eventually, all the bears who were short cover. They buy back their shorts, and then there's nobody left to buy at this level. What happens if there are no buyers at this level? The market has to fall to a price where buyers will come back. And a lot of times it's around the bottom of the buy climax. So we may have a lack of buyers up here, and we may slowly work down over the next month to this low. So this is probably an exhaustive buy climax, an exhaustion gap, not a measuring gap. And that means it's more likely that we'll get down here before we get up to maybe a measured move up, right? So it's more likely we'll get here than it is we'll get there. So, this is what, $40. So, you'll sometimes hear traders say, oh, the next $40 is down. What they're saying is we're probably going $40 down here before we go $40 up here. This is strong enough up so that the bulls might get a micro double top, might get a small second leg up, but I suspect that this is so extreme, so late in the strong bull trend that we may not even get the second leg up. We may simply do this, enter an endless pullback, like after any kind of parabolic buy climax. But anyway, I think Boeing is one of the most interesting charts right now. I don't know if you pay attention to Blue Apron. This stock just went public last month, and it's one of those companies that you call them up and they prepared, they cut up food and give you raw meats and stuff, and drop it off at your doorstep, and you cook it. And I have 3 daughters and two stepsons, and my 3 daughters all buy from these companies. They work 60, 70 hours a week, and they don't have time to go to the grocery store. And 2 live in San Francisco, 1 lives in West Los Angeles, and they don't have time, but they do like the idea of eating at home fairly regularly. So they use these companies. I don't know that they use Blue Apron. They've tried a whole bunch of the different companies. In any case, Amazon announced that they're getting into the business and right after Blue Apron went public, and this is what happened. Blue Apron, sold off, 40%. Do I think it'll go down to zero? I don't think so. My guess is they have a certain amount of loyal customers who like their style, and but this is bad. I don't think we're going to go up very far, but it's probably in a tradable range. Traders buying dips like this, and then taking profits on the rally. Snapchat is another, I think, interesting stock. I see Snapchat, you take pictures with your camera, and then you use Snapchat to add things to them, some kind of altered reality, put dog ears on, or, who knows what. But it's pretty popular, and I think a lot of users use it. Their problem is Facebook can do the same thing, and Facebook has, 10 times more users and 10 times more engineers and 10 times more everything. And therefore, Snapchat, I think, is at risk of being put out of business. I don't think they will. I think at some point they'll get cheap enough so that somebody will buy them. Google, maybe a competitor of Facebook. But it's really interesting how a company with a good product loses half of its value after going public. Parabolic cell climax, measuring gap, probably start to go sideways here. I do not think it'll go to zero, but it's another example of an IPO where the stock just got hurt really badly. Facebook, when it came out, I don't know if people remember. I don't know if this goes back far enough. But when it came out, I don't know if this is when it came out. Might be. It also lost a lot of value early on. People were very critical of Zuckerberg, a kid, no management skills, and how are they going to make money from it? And so it fell to below 20. And obviously, today it's 8 times higher in price. Do I think Snapchat and Blue Apron are going to get 8 times higher in price? No, I don't think they have a chance, because Blue Apron's competing against Amazon, and Snapchat is competing against Facebook, and their competition is just too great. But I just wanted to make the point that Facebook sold off badly when it first went public, yet it became an incredible company. But the circumstances were different. It wasn't competing against a giant. MySpace was its competition, and that was not a really well-run company, and it was not a giant. Another second entry short. We have a double top, 16, and then a second entry short here. But we still have a measured move. Well, I'm going to get rid of that measured move target because we've already fallen too many ticks below. So the alternative measured move target is leg 1, leg 2. Leg 1, leg 2, which is right there. And then we have a double top, so another measured move would be a breakout above the double top. And for the bears, they want to break below the neckline and a measured move down. I've placed at least 2 orders. I've been scalping from one point, but I've had at least 2 orders today, limit orders that did not get filled. Now, I don't remember, it may have been even 3, but it was at least 2. I tried to sell the 4 high, did not get filled, and then I tried to, what did I try to do? I tried to buy somewhere in here, and the first order didn't get filled, but the second one did. But I'm back to flat. I want to buy low, sell high. We're always in long, and not a lot of selling, and I think we're probably going to a new high, so I'm hesitant to sell yet. In case you haven't noticed, Amazon is just continuing higher. Jeff Bezos, the CEO, I think he owns almost 20% of the company, and that means his net worth is around $90 billion. And I just read that he's now the world's richest person. He passed Bill Gates. It's really fascinating. I don't know if you remember back in the early 90s, I used to love to go to bookstores like Barnes & Noble, and then Amazon started selling books. Bezos started by, I think the first stuff he started doing was selling books online with Amazon, and eventually it reached a tipping point. More than half of all books sold were electronic versions instead of actual books from the bookstores, and a lot of the bookstores had to close. And then he started doing other stuff. He started selling cloud services, which to me was really surprising. A guy is a bookseller, and why would a bookseller start selling cloud services? It's because he's a visionary. He saw that the future of books was online, and he also saw that there would be a tremendous demand for cloud storage. So, I really admire the guy. Bezos, I think, also owns a rocket company, just like Elon Musk from Tesla. And, I'm not sure what else Bezos is into. I know he owns the Washington Post. But with $90 billion, he can own a whole bunch of things if he wants. It'll be interesting. Since he's done so many really clever things that show a lot of foresight, up to this point, you have to assume that he's going to be a really interesting guy to follow. Amazon also now is trying to create original content. They do music, they do movies. So I think it's really fascinating that, what he's doing. And I think it's especially interesting that he's able to see the next steps, starting a book selling company and then thinking, okay, if I'm selling books, I'm storing them online. Maybe other companies will want to store stuff on the cloud. So he started doing the cloud services, and then he did some hardware, and now his site is basically doing everything that eBay is doing. I don't know if you ever look at online retailers, brick and mortar retailers like Macy's, and then go to their online site. Here's Macy's, and I get a kick out of Macy's. I buy stuff at Macy's. I like their approach. Everything is on sale half the time and then not on sale the other half of the time. But you never buy anything at full price at Macy's because that they play a game. They're always trying to make customers feel good by having all kinds of crazy sales. But they're not sales unless the items are priced at full price part of the time. So Macy's always has things at full price, but you never buy at full price because it's a gimmick and you can always buy it cheaper. Anyway, if you go online on Macy's website, it's just really a bad website. And then if you go online for their credit card services, they're even hooked up with American Express. It's really horrible. And, I think this is their weekly chart. I think a large part of their problem is that they're way behind in the online, on their online presence. They haven't figured it out. And a lot of companies like that. Macy's is an obvious one. Foot Locker is one. I heard the other day that Foot Locker just recently began selling stuff online. I find that hard to believe, but this is again the weekly chart. They lost a third of their value, and it's, I think, in part, probably in large part, because they don't have a good online presence. Amazon is just taking all their business. I also heard the other day that Amazon is thinking about somehow getting involved with healthcare. And I don't know if that means they're going to start selling medical devices, pharmaceuticals. I have no idea. But I do know pretty much everything that they've done so far has been extremely successful. And if they do get into healthcare, you have to assume they'll do it very well. I think there's a tremendous opportunity in healthcare, becoming a patient advocate. You know, the way healthcare is structured, it's really stupid and unfair. You know, let's say a hurricane's coming and all the stores close up, and therefore it becomes very difficult for you to buy food. Or if there's an earthquake, same thing. After the earthquake, you know, infrastructure is disrupted. It's really hard to get food or water. It's against the law for a store to quadruple the price of water or quadruple the price of food, right? So there are consumer protections. But in healthcare, there are no consumer protections. Here you have 300 million consumers, and they have no say in prices. You know, the government, in fact, makes it illegal for the biggest consumer of healthcare, Medicare, to set prices. So there's no ability for the consumers to say we're not going to buy services unless you reduce prices, and that's because the consumers die if they don't get their services. If a diabetic doesn't get his insulin, or a heart patient doesn't get his heart medicine, he dies. So he's not in a position to negotiate. However, if a company like Amazon ever were to take the consumer's point of view, telling the sellers, you know, either you greatly reduce prices or we're going to buy from India or Canada or somewhere else, all of a sudden prices would become a lot less. And if Amazon ever were to get into the services, you know, owning hospitals or, you know, having doctors work for them, they could also put tremendous pricing pressure on the doctors and the hospitals. You know, in a single payer system, socialized medicine, the government takes that role, but our government is not taking that role, and therefore we have a very uncapitalistic system where the sellers get to set prices and the buyers have no ability to negotiate because they die if they refuse to buy. Still always in long, right? One of the reasons why traders are hesitant to buy here is the high of the day is only a few ticks higher. Everyone believes we're going to a new high, but traders do not believe we're going much above the high. And they want to buy low enough so that they can take profits at the high. And, you know, if we only go a tick above the high, like we did the other day, you know, here we only went a tick above the high and we sold off. And today looks very similar to that. 2 legs down to the moving average, a rally. 2 legs down to the moving average, a rally. If today follows that and we only go 1 tick above the high, there's not enough room for bulls buying here to make money. Not enough buyers at one price, and the market has to find another price. Similar to yesterday, we sold off in a double top, sold off double top. Let me get rid of these measured move targets. The bears are hoping that we got a double top, break below the neckline, new low of the day, test of yesterday's close, and 60-minute moving average. On the open, I said that today could become an outside down day because yesterday's range was so small. I think it's less likely after 2 legs up, but it's still possible. So what was the news that caused this? I don't know. All I know is that bulls are giving up and bears are starting to sell. Now, what about buying the 24 low? Well, bulls will do that. The reason I would not do it is because the market is probably going to break out of this range, and it looks like the bulls have twice tried to break to a new high and failed, and that increases the chances that we'll next try to break to a new low. It's possible the day could stay this small all day, but like I said, that you only get a small day like this, maybe 3 times a year. And a lot of days start small like this, but most of them end up getting a little bit bigger. Bulls trying hard for the failed breakout, the bear trap. You have to assume that the bulls will be disappointed by either the close of 37 or the follow through. Excuse me, the bears will be disappointed by the close or the follow through. It's a trading range day. It goes down, bears get disappointed. Goes down, bears disappointed. Rallies strongly, bulls disappointed. Tries to resume up, bulls disappointed. Sells off, bears probably disappointed. You saw in the final seconds how the bar closed down near its low. I think it's probably a give up bar, and we're probably always in short. But like yesterday, bar 11-12, similar, you can still get a pretty good pullback when the day is a trading range day, and the bulls will try to get a high 2 here. They have a high 2 here, leg 1 pullback, leg 2, leg 1 pullback, leg 2, trading range day. So the odds are the bulls will do something to disappoint the bears here, but right now it's more likely we're going below 6 than it is above 1. I think we're always in short. Do I think it'll be a big bear trend day? No, I think that we're going to stay a trading range day. Probably buyers below the low of the day and around the 60-minute moving average, but we still might go outside down. Outside, trade above yesterday's high, trade below yesterday's low. Can you buy here? I think only if you're using a stop, maybe even below yesterday's low. Can you sell here? Well, the odds are the first reversal up will find sellers. I think a lot of traders would rather sell a little bounce, but chances are we're going at least a little bit lower. The range is still only 5 points, which is still small. 5 points, maybe you get 4 or 5 days a year where the range is this small. I'm putting a pink circle over all of the days where the range has been 5 points or less. We've only had one so far this year. Today so far is the second one. Then last year we didn't have any. We had 0 in 2015. 2014 looks like we had a few. So it looks like we had 3. So what's the chance that we're going to stay at a 5-point range? Probably small. So we're probably going below the low, and the range will probably get bigger. Probably buyers, 60-minute moving average, buyers 1 point below 6 low, probably buyers yesterday's close, but probably sellers on any little bounce. It's interesting, the past 2 days have been bear days, and today might be a third, and today we may go outside down, which would be a micro double top, micro triple top. Scale in bulls bought 6 low, because even with the sell-off, it's still a trading range day. The bulls have bought the 6 low and or 1 point below probably will make money, but we're clearly always in short. So for the next several bars, probably easier to make money selling a rally. What about the bulls who bought the 24 low? Will they make money? I'm less certain that they will, but I think we'll get above the 6 low. If we do get up to the 24 low, right now I think we probably will get there over the next hour. But if we do, I think we'll get a lower high. So right now, we already know 90% chance we're not going back up here, which means probably 90% chance we're not going above the double top. So bears selling for any reason have a stop that's not too far away. So we know the odds are against a bull trend day. That leaves us with a trading range day and a bear trend day. With all of the trading range trading and with the market finding support at the 60-minute moving average, the odds are against a big bear trend day. However, bears will sell rallies. I think we're going to get above the 6 low. I think odds are we'll probably get above the 24 low, but I think we will not get above the 36 high. So traders will sell somewhere in this area using a stop up there. And for the bulls, I think they're probably okay buying here, but I'd rather be selling higher or buying a second entry buy or buying with limit orders at least a point below 6. For the bulls, a big high 2, leg 1, pull back, leg 2, and a 2-bar reversal. Testing 60-minute moving average. I still think we'll go a little bit higher, but we may go mostly sideways to the moving average. I don't know if this will remain the low of the day, but I do think we're always in short, and I think 90% chance we're not going back above the high of the day, probably 80% chance we're not going above the 36 high, and therefore the bears have a pretty high probability stop. If they do sell and if they scale in, they have to trade small enough so that if their stop is hit, they do not lose more than they're comfortable losing. Low 1 short, but sell climax at support. That combination usually limits the downside, and therefore probably buyers around the 40 low, 41 low, and lower. We're probably going to start to go sideways here. I'm assuming we'll get back above the 24 low, but I'd rather either be short or sell rallies than buy with stops, buying maybe below 40 or maybe below 39, right, with limit orders. But I don't want to be buying with stops this far up. I'd rather be selling above bars. Limit order bears 39 high. A lot of them will just take a 1-point profit here, especially because 40 has a bull body and we're at support and we're after a sell climax. I sold twice. I sold the 37 close and then I sold the 39 high, and I'm back to flat. So right now I have to wait. I did not buy the 40 low. As you know, I do not like to reverse, and this is an example. If I were flat, would I have bought the 40 low? Probably not, because I think we just went always in short. And when the market just goes always in short, I usually only want to sell for a few bars. But it's an example. It's an example of me not wanting to reverse. Another example is the euro. I bought sometime back in May, I think somewhere over here, and I get out earlier this week. I forgot where I get out, but somewhere up here, and we're in the sell zone. I don't like to reverse, but I did go short here, so it's several bars later. I like to get out and then wait and reevaluate rather than reverse, although sometimes the context is so good that I will reverse. Probably more buyers than sellers here, but I'd still rather be selling rallies than buying new lows. Trying to go outside down. Outside down is good for the bears, but it's not especially bearish. A lot of times the market will be symmetrical, and we went 2 points above the high and reversed down. If we get 2 points below the low, we'll probably reverse up. This is more bearish than I thought was likely, so right now I'm trapped out. Outside down, so you got some bears taking profits, and you have aggressive bulls buying. Since it went 2 points above yesterday's high before reversing down, those bulls are betting that maybe it'll go 2 points below yesterday's low and then reverse up. If they're buying right at yesterday's low and they get a quick scalp, they take it. If it goes down lower, they buy more, maybe put a stop 3 or 4 points below yesterday's low, betting that there should be enough uncertainty so that we'll get enough of a bounce and they'll be able to make money. Trying to get a bull breakout above a bull channel, 60-minute chart. Here's one trend line, but I could also draw a trend line using these lows, and that's, I think, more likely for a first target. I want to talk a little bit about the higher time frame charts. So daily chart, 3 bear bars below, new low, this time outside down. If we close down here, that would be good for the bears. We have a parabolic wedge on the daily chart, 1, 2, 3, and now a micro double top or triple top. Weekly chart, you can see we're getting down near the open of the week. If the week closes below the open, then we'll have a bear reversal bar. I think this looks like a bull leg in a trading range, which means I think we'll get a bear leg in the trading range. Monthly chart, I know it sounds unbelievable, but it's still possible that the month could be an outside down month. We have 2 days left, tomorrow and Monday, and it's still possible that in those 2 days we could sell off 40 points to, it's probably more than 40 points. Right now it's 60 points. Very unlikely that we'll sell off 60 points, but still possible given how overbought the markets are. Huge sell climax, and we fell about 2 points, a little bit more than 2 points below yesterday's low. Sell to close, but with a bar like 42, a lot of bears are hesitant to sell. Whenever you get a bigger bar, especially reaching down to support 2 points below yesterday's low, it's climactic, and a lot of traders would rather sell a pullback than sell closes. We're beyond a measured move based upon the opening range. $15-minute Globex chart, very strong sell-off, always in short. I would not buy, even though it's climactic and we're at support, a couple points below yesterday's low. So you're either selling or you're looking to sell higher, or you're waiting for the market to go sideways for several bars and create some kind of a bottom. Micro double bottom, second leg down, very big sell climax bar 42. Probably not going to be a big bear trend day, but it's already more bearish than I thought it would be, and not good enough for me to buy. Limit order bulls, okay. Limit order bulls. Remember I said we might fall 2 points below yesterday's low. We fell 10 ticks below, and the bulls who bought yesterday's low and or 1 or 2 points lower have made money. If we do go up, the target for the bulls, 60-minute moving average, the 6 low, and then the top of the sell climax. 90% chance we're not going to get up to the high of the day. This is late in the day for a reversal day. Sometimes you'll get a sell-off and then a reversal day starting this late, but usually not. Here's a reversal day down, starting early. This one was a trading range, and we get a reversal down in the middle of the day, 10 o'clock. The reversal up here, before 9, before 8, around 8. So usually when you get a reversal day, the bottom is earlier. All right, really good looking bar for the bulls and decent context, but really strong momentum down. So I think difficult to do anything here. I think the bears get out of shorts above 43, and I'm not going to take that buy. If I'm buying with limit orders below bars, not with stops above. What do? Do you sell below 44? It's a strong enough reversal and a micro double bottom. The odds are we go sideways to up here, and that lowers the probability of selling below 44. Right now, the bears want the day to close at or below yesterday's low, daily chart. 3 bear bars, each one getting bigger. Even though we're sideways, that's increasing selling pressure. And they want to make sure that they get a strong bear close. The bears have had lots of good sell-offs on the daily chart, but look at this, a huge outside down day and a big tail. A bear bar, terrible follow through. Good bear bar closing below the moving average, terrible follow through. Bear breakout, close below the low of the past 15 bars, bad follow through. Big bear breakout, close below the low of the past 20 bars, bad follow through. Right, so as long as the bears fail to get good follow through, the odds favor higher prices. But if they start to get good follow through, then the odds are that we started the correction down to, I think, this low and maybe this low. And it took several months to get up here. If it does get down there, it'll take several months to get down there as well. First target, obviously this potential final flag. And on the weekly chart, the target is around 2400, the weekly moving average, which is this low, but I think we'll fall below it. You know, in the past, when you've had pullbacks to the weekly moving average, the market fell 20, 30, 40 points below. Does not look like much of a dip, right? But 74, it's 30 points. This is 30 points below, right? And this is, you know, whatever, 100 points below. So we could easily fall down here, which would be, 30, 40, 50 points below the moving average over the next 2 or 3 months. Now, what do the bulls do who bought that 42, 43 high? Well, they're obviously worried, right? Now, can the bears sell below 44, arguing the trapped bulls will have to get out? Right now I'm trapped on the sidelines. I don't like to sell in climaxes, especially at support. So I would not sell here. This is really interesting. It's actually a buy with a stop one tick below 44. Right? It's about a 50% pullback. Whenever you get a bull reversal bar that's very big and it triggers, the next bar goes ahead, goes above the high, you often get a 50% pullback like this. And this is a buy right here with a stop one tick below 44. This is one of those low risk, low probability trades, right? The bulls who bought above 43, a lot of them will get out below 44. The bears who get out above 43 theoretically have to get short again below 44. And therefore, it's a really important price. And the bulls will try to defend it. Whenever you have a low risk trade like this, buying right here, risking, okay, you get stopped out. Whenever you have a low risk trade like that, the odds are you're going to get stopped out. But the reward is so much bigger than the risk that mathematically it's okay to take the trade. I sometimes take those really low risk trades, but usually only in situations like this, where we have a reasonable chance of a double top and a reversal. Although I did not sell here, I ended up selling here. Not a lot of sellers below 44. There were sellers below 40, but we got this micro double bottom here, and like I said, that when you have an outside down day, a lot of times you get symmetry. The market goes above the prior day by a certain number of ticks, and usually it tends to fall below the prior day by about the same number of ticks, and then the buyers come in. A lot of the bulls who bought above 43 put their stop below the micro double bottom, and they held below 44, or they bought more at the 44 low, taking a chance that we rally for maybe a measured move up back to the 60-minute moving average, the moving average, maybe all the way back to the 6th low. I think probably for the rest of the day, the most important price will be yesterday's low. We went outside down, and the bears will try to close the day below yesterday's low. Here, yesterday we fell below the low of the prior day, but the bears could not close at below that low. And chances are the bears will not be able to close below yesterday's low today. Okay, micro double bottom 42, 43. Bulls trying to create a second consecutive good buy signal bar. If they get it, it would be a higher probability buy than 43, but I think the bulls will be scalping, looking to take profits, at resistance, moving average, 60-minute moving average. You can see we went 5 ticks above the 44 low. What does that tell you? It tells you that a lot of the bulls bought below 44, but scalped for 1 point. What happens if we fall below 42? Probably buyers, right? Look how aggressively they bought. Look at the tail, 42, 43, right? So if it falls below 42, would I sell with a stop? No, because traders are buying here. We're still clearly always in short, but I think a lot of the bears want to sell higher. All right, so let's see what happens. Do we collapse or do we find buyers? Stop order bulls would like to get a second entry buy. They would like to get a second buy signal bar with closing on its high. I do think part of the selling is due to the end of the month. There are bearish institutions that are trying to get the month to go upside down. Even though it's unlikely, if this is the start of a 2 to 3 month correction, the bears need to start doing things that make traders take notice. The bears need to start taking control and doing some dramatic things to make the bulls not want to buy. And to me, the most dramatic thing they could do would be monthly chart going outside down or at least below the open of the month. Open of the month right here, 31.5. Does not look possible. I'll just leave a note down there as a reminder. A lot of bears do not want to buy here. Excuse me, a lot of bears do not want to sell here. Consecutive sell climaxes, parabolic wedge, 39.42. Bulls, I don't think we're going to go down a lot more, but I think it's too dangerous to buy. The context on the higher time frame charts is really good for the bears. While we're not quite this bearish, right? This is the kind of thing that we could get just relentlessly down for the rest of the day. We did that at the end of June, and now we're at the end of July. on this channel, this is the 60-minute chart. Here's the daily chart. No, what about the weekly chart? Weekly chart, getting a bull break out of a bull channel, and 75% chance it reverses. Here's the daily chart, a bull break out above a bull channel, 75% chance you get a reversal that starts within 5 bars. And this is maybe 6 bars, 7 bars, but the bears are trying to get down to the bottom of the channel for their first target, which is around 24.30, and that's at the open of the month. Apple, Alphabet, daily chart, Amazon, okay, look at Amazon, great earnings, and that's what happened. Facebook, great earnings, that's what we're getting. Why we do that? Because stock traders have a tremendous profit, and they know we're probably not going to go up a lot from here, so why not start taking profits? And if you're a bull taking profits, are you going to buy tomorrow? No, you're going to buy, after 10 bars or so, and then see if the bears have taken control. If the bears have not taken control, you buy. But if the bears are clearly in control, then you don't buy. Honeywell, it's a major conglomerate. Carnival Cruise, trying to reverse down, final flag. Gilead has had a good run, but spike pullback, parabolic channel, probably not much more up. Very dramatic sell-off. We've got prior higher lows here. A lot of times when you get this kind of a situation, the market tries to get down to the bottom of the most recent buy climax or leg up, and then you bounce. And if we bounce, head and shoulders top, traders start to look for head and shoulders top, left shoulder, head, right shoulder, which would be a lower high major trend reversal. Anyway, today is a very good day for the bears, a very strong breakout below a channel. Don't need both of these. Parabolic sell climax. So it's similar to that June 29th day over here. And we got a big reversal there. I don't know that we'll get this today, but obviously this is really good for the bears. I have no idea what the news is. I don't think it matters. The news could be the catalyst that starts the sell-off, but the reason for the sell-off is this. The weekly chart has been above its average price for too long, and not enough traders are willing to buy this high. I mentioned yesterday that I increased my net short position, so this is obviously good for me. You can see on the daily chart we have another gap. We're testing it here. Very climactic. You can see ticks below 1,000. Usually the first time it gets there, it's not the final low in price. I'll put up a 1-minute chart. Ticks below 1,000. Usually whatever bounce you get will lead to at least one more low in price. parabolic sell climax. Bulls are hoping for a big reversal like we got at the end of June. Let me just check the time of day. Okay, here the reversal was at 10:30. The collapse started at 7:50. Today the collapse started later, but we're right at the time, 10:30, when it reversed up at the end of June. Again, I think it's not worth buying unless we get a big reversal like we did back at the end of June. If we get a big, strong bull bar, then you could buy, taking a chance that we're going to get up to the moving average. Otherwise, I would wait. If you're not short, I would wait. This is too extreme, too climactic. That's the end of the hour. And close below the low of the past. Do we close down here? No. Certainly close below the last 15 bars or so, which is good for the bears, but they need follow through. This line is the daily moving average. I'm not aware of any particular news story going on other than, at some point the country or enough people in authority will get bothered by Trump's decision making, and that could be the excuse for the sell-off over the next few months. Not a lot of traders willing to sell this far below an average price after a series of sell climaxes. Plus, a lot of traders look back and they know this is similar to the end of June, so they're wondering if we'll get a bounce here. Bears, I think after this much of a climax, would rather sell higher. Similar to this big sell climax, target for the bulls, the top of the most recent leg of the sell climax. We obviously went higher here. We do not have this kind of a reversal yet. We might get it, but we don't have it yet. Weekly chart, getting a good reversal bar. Daily chart, closing that gap. I would not sell here. This is just way too climactic, and we're probably going to get a rally for 10 bars or more. To buy, I think the bulls need a very strong bull bar, like 77 yesterday, or like this kind of thing, a very abrupt, huge reversal bar. Trying to reverse up from a parabolic sell climax. Probably sideways to up for about 10 bars, either starting here or soon. Whenever I'm buying in a sell climax, I usually take at least half off at 2 points. It's really pretty interesting how it's paralleling that sell-off at the end of June. Maybe I'll put it over here. Here's the 1030 sell climax, got all the way to the top of the most recent sell climax high. The top of the sell climax high is way up here. That looks like a stretch. I don't know that we'll get there. But after the initial reversal, which is what we have here, the market went sideways for 6 bars. Might do the same thing here. Well, I just ended up, it hit my limit order, and I'm back to flat. That's 18 ticks above the 1 minute high. So now I got to look to buy again. I don't need too many lines on the chart. I think we're always in long, just like I said over here. Who's going to sell below 52? Probably not many traders. At a minimum, the always in bears get out about 4 ticks above 50 or 1 tick above a big bull bar here. And the always in long bulls stop is down here. Can the bears sell below 52 for a low one short? I would not. I think the odds are we're going to be sideways to up for a lot of bars. Amazon. Just about a measured move down. Might get back up to this area and turn the day into a doji bar. Certainly looks like the bulls have a good chance. Spike pullback channel, top of the channel, the breakout point. I think better than 50-50 chance we've seen the low of the day. Even though a very strong bear trend, probably buyers somewhere below 52 will get a higher low and it will go sideways to up like this. We're probably doing this right now. I have been comparing today with the end of June, the sell climax we had then. The obvious question is, which sell climax was stronger? Were the bears stronger here or here? And today, there we had more bull bars on the way down. So, maybe today's a little bit stronger, but I think they're comparable. And I think, we're, probably going higher. Remember on the tick chart over here, we had the low value in ticks. And I said, usually that's not the final low in price. Usually you get a lower price level and a higher tick level, which is what we did. So we had a tick divergence. Bulls trying to get this breakout, pair of consecutive bull bars, and a measured move up to the 44 high. Might get some selling around the moving average, but I think we're always in long. And probably 70% chance we've seen the low of the day. For the bears, they want a low too short, 52, but they need a pretty good reversal down. More likely, we're going to get profit taking and then bulls buy scalping for the rest of the day. 2 legs up to the moving average. So you always get some sellers around the moving average in a bear trend. Bears will sell for scalps. Bulls will take partial profits. Probably if we get a sell-off, the bulls will get a double bottom around the 54 low and then an attempt at a major trend reversal. it's possible that we simply continue up in a channel for the rest of the day. Usually, especially with the sell-off as strong as this is, I think it's more likely that we'll start to pull back and get a trading range. What do you do? Low too short, but pretty good breakout bar, 56, and always in long. Odds are we're going to pull back here or soon. We still have a gap open here, so the bulls are buying the 57 low, trying to prevent the bears from triggering the short. And even if the bears do trigger the short, we'll probably still remain always in long and simply form a higher low. Not a good location to buy. Institutional bulls are buying, trying to prevent the market from trading below 57. You see what happens to the sell to close bears? Usually after 5 or 6 bear bars, especially if there's a big tail, I stop looking to sell closes. Usually if you get a big tail, the market's going to fall 2 or 3 more bars and then reverse up. And usually after 5 or 6 consecutive decent sized bear bars, the market's going to reverse up. And therefore selling 49 close, 50 close is, I think, risky. Imagine if you sold the 50 close. What do? Are you still short? Well, I think technically you get out about a point above a bear bar or 1 tick above a bull bar. So had you sold here, you'd get out here. You're just above 51. And for shorting below this, a low 2 at the moving average, micro double top, 57, it's probably a scalp. And as for buying up here, it would have been better if the bulls got a pair of bull bars like over here. And because they did not, it creates confusion. And it makes it, I think, likely that we're going to get some kind of a pullback here. Getting near the end of the hour, and this is what the hourly chart looks like. Big bear breakout, but a failed breakout bar on the 60-minute chart. We broke below the low of the past 30 bars or so, and instead of having a second consecutive bear bar confirming the breakout, we have a big bull bar making it a failed breakout. On that last, at the end of June, the rally ended up going sideways after 11:30. It went a little bit higher, but not much higher. We're around 11:30 now. We might get all the way up here and 60-minute moving average. I don't know, but I think the upside is probably limited. I think we're always in long, and if we do sell off, we'll probably form a double bottom down here. So you got bears selling above bars, bulls buying below bars and scalping. For the bulls buying, I would not buy below 57. I would either short or look to buy lower down, like around 54 low. What happens if we get a high one buy here? Becomes tricky. For the bear scalpers, they probably get out above. And for the bulls, I think we're always in long, and they probably want to buy lower, but it's a negative gap, and they have a reasonable argument that we could go up for a measured move a little bit higher, maybe there, less likely all the way up here. I think the bulls would rather buy a weak sell-off down to the 54 low area. For me, I'm scalping, so I sold and I've already gone flat. I'm looking to buy, but only if we get a weak sell-off down to around the 54 low. Difficult call. For me, I'm not going to take the buy. Not a strong buy signal bar of 60, right below the moving average. Strong enough reversal, always in long, but I want to buy a deeper pullback, not back at the average price. Not a lot of buyers willing to buy above a doji after a bear bar, just below the moving average in a bear trend, even if it's always in long. The bulls would rather buy lower. If we broke strongly above the moving average, traders would be more willing to buy a pullback. Here, we broke strongly above the moving average. Traders were more willing to buy a pullback. Here, we got a micro double top at the moving average, and that makes traders not want to buy just below the moving average. They want to buy lower, maybe at the 54 higher low. Can you see the difference between the behavior here? Here we had a pair of bull bars breaking above the moving average, and here we're reversing down at the moving average. Here we had 7 consecutive decent bear bars. Here we had 2 bear bars, bull bar, 2 bear bars, bull bar. The sell-off, I think, today is stronger, so I still think Roy's in long, but the bears today, I think, are stronger than they were here at the end of June. Bear close, bad follow-through, testing the 56 buy climax low, so it's a better price level to buy than above 60. Most likely we're going to stay sideways pretty much for the rest of the day. Makes it a little bit tricky to trade, but I'd rather be buying down here than selling. Bulls getting an IOI, micro double bottom, and a second entry buy, but even with a good bull bar 62, it's still forcing traders to buy right at the moving average, which is a resistance level. Can it get all the way down to the 50 close? The bears arguing it's a reasonable short and therefore sell more below a strong bear bar 59. Well, let's look at that. So saw the close 50, scale in below a bear bar, get short there. Here's the average entry price, which is right around here. A higher low and a possible bull trend is always a magnet. Okay, right now, the bears who sold the 50 close and sold more below 59 are able to get out break even. So you might get some buying here, plus the bulls want the double bottom 54. The bears are hoping it gets all the way down to the 50 close. It was reasonable to sell that close. Not necessarily good, but certainly reasonable. And the bears are hoping that it'll get back down there. They can get out break even at their first sell, and then with a profit on their second sell below a bear bar, either below 57 or below 59. We're in the buy zone now, the bottom half of what probably will be a trading range. I said we've probably seen the low of the day. I still think that's true, but every bear bar that we get reduces the probability that we've seen the low. And if you get enough selling, the probability begins to shift in favor of a new low. Right now, it's still more likely that we've seen the low. And we're probably in the buy zone around a 50% pullback, testing the prior lows. But the bulls need to stop the selling and have the market go sideways for a couple of bars. Bears hope for a gap and a measured move down. A gap, 63 close, 61 low. They probably will not be successful. This is probably a trading range. Big down, big up, big down, sideways. Maybe a wedge on a smaller time frame. Down 60, up 60. And then up 62, trying to go up 64. I still think Roy's in long. Bulls trying to get a higher low major trend reversal. The channel down is fairly tight. That makes the first reversal up from here probably minor, and the bulls will probably have to go sideways more. And for the bears, I think they have not done enough. enough yet for always in short. Bear, bar, bull, bear, doji, bear, bull, bear. Who knows? Maybe bull again. We're in the buy zone, and the bears have not done enough. They got a little bit of a negative gap here. So they're hoping for a measured move down to the low close of the day, the 50 close. Right now, I still think the odds are we'll try to form a higher low, but not a good stop entry buy 64. Right now I'm flat. I want to buy because we've traded down in what is probably a trading range, but that's not a good enough buy. 63, a big enough bear bar to make it likely we'll get at least a micro double bottom, at least a small second leg down. A low one short. We broke below 54, have a pullback 64, but a bull body. Likely to get at least a small second leg down after 63, but not a good sell signal bar 64. Probably buyers at the 64 low and not far below. Do I still think that we've seen the low of the day? I do. And I also think that if we fall below the low of the day, probably buyers below. Not a great buy signal bar of 64, but the context is good for the bulls. This is probably a trading range, so traders are buying low, and they have a double bottom 54 and a wedge 60, 61, but not a good buy signal bar of 64, and we still might have to get a micro double bottom down here. Traders would rather be buying with limit orders below than with stops above. I put this back to the 15-minute Globex chart. Traders sold the moving average 57. They sold again 59. They sold again 61, 62. What will they do this time? I don't know. I don't want to be buying too high up, but I also think we're always in long. So I'd rather be buying the low bars and scaling in, and to sell. For me, I think it's too low to sell when I think it's always in long. The bears are hoping head and shoulders top bear flag, left shoulder head, and then right shoulder. Bears will probably sell the moving average, but I think we're always in long. And even though it's a very tight channel and the odds are against the major trend reversal, it's still always in long and a higher low major trend reversal. And that makes me not want to short at the moving average. We're in the final hour. The bulls want to undo some of what the bears accomplished. On the daily chart, the bulls obviously want to close above significant prior lows like these lows, possibly even yesterday's low all the way up here. You know, right now it does not seem likely, but we came down pretty quickly. We could also go back up pretty quickly as well. So do bear scalpers sell here? I don't think the probability is high enough for a bear scalper. A bear swing trader might take that sell, but I think they have only a 40% chance of getting the reversal down. I still think we're always in long. And now we have 3 consecutive bull bars here. So that, I think, weakens the bear argument. Sell the closed bears. I did not take the sell, but sell the closed bears got their scalp. You can call it a triangle, 3 pushes down, head and shoulders top. Every head and shoulders top is a triangle. It's sideways and it has 3 pushes down. Every head and shoulders bottom is a triangle as well. Breakout mode. With all breakout mode patterns, 50% chance the first breakout fails, 50% chance the final successful breakout is up, 50% chance it's down, 40% chance you get a swing down from the head and shoulders top. Final hour, sideways for almost 20 bars, and a limit order market. Still always in long, but with the market, with bears making money at the moving average repeatedly here, the bulls want to buy lower, and the bears are scalping, so they don't want to sell too low. Bulls trying to get a bull breakout, trying to get above the moving average. They want to get back up to yesterday's low. At the moment, I think the odds are unlikely. The odds are that we'll probably stay mostly sideways for the rest of the day. Let me flip that upside down. Okay, so this is what, if you see a chart that looks like this, you think that this is a double top and a failed breakout and will fall below the neckline for a measured move down? Or do you think it's more likely that this is a pullback and this is a breakout of a high 2 bull flag? So bull trend, high 2, bull breakout, and then a pullback. It's more likely a pullback from this bull flag, and it's more likely that we'll go higher. And it's possible there could be a spike in channel. So spike, pullback, and we might pull back for 1 or 2 more days, but then get a second leg up. This is, if you look at this chart, you say it's probably bullish and we're probably going higher. And this is so strongly up that we may go up higher for several days, maybe even the start of several weeks. It's too early to tell yet. This is an upside down version of the E-mini. Here's the real E-mini. And I'm just trying to illustrate the point that the odds are this is strong enough so that we'll get follow through selling at least over 1 day, maybe several days. And here's the upside down version. An initial breakout like this probably will get at least a small second leg up. Initial breakout to the downside like this probably will get at least a small second leg down. Another possible sell, but the range is getting tighter and tighter, and the math starts to become bad for scalpers. Selling below 66 or 67, loser. Buying above 68, loser. And now the bears have another sell below 70. So really not very good. I don't know that the probability is high enough for a scalp. Bears trying to prevent the market from going below 70. They know a lot of bulls will exit below 70. And I guess a lot of bears might sell for a swing down. Bulls instead are trying to break above the top of the 70 sell signal bar, hoping that we'll break out and get a measured move up, maybe all the way to yesterday's low. More likely, we're just going to stay sideways for the rest of the day. Bulls trying to get a measuring gap and then a rally up to yesterday's low. A little bit of overlap, 72 and 70, always in long. I'm not sure that it's worth buying closes unless you're willing to take a chance on the swing up. And for the bears, I don't see anything that I would sell. There's double top and a complex big low 2, leg 1, pull back leg 2, leg 1 subdivides into a low 2, leg 2 subdivides into a low 2 or a wedge. But I still think the bears have not done enough, and therefore not a very good short. By the close, bull 71 scalped, and it looks like traders sold the 57 high for a scalp. Bulls trying to get a breakout, but not all that strong. To sell below 73, I think the bears would want it to close on its low and totally reverse 72. So in other words, have maybe a 4-tick bear body. Otherwise, traders will wait. We have gap bars, 72, 73, often lead to the final leg of the bear trend. So the way the bulls see this, they see this as a minor reversal, maybe a higher low major trend reversal here, maybe not. Possibly the whole thing is a minor reversal. And then if we get gap bars and we sell off again, that would form a larger, more convincing higher low or lower low major trend reversal. Gap bars never look like they're going to work. The reason why there are gap bars, a gap below the low of the bar and the moving average, is that the bulls are strong. So if the bulls are strong, a reversal never looks like it's going to work. A small gap. Actually, that's not what I want. This is what I want. When you finally get gap bars in a bear trend, the bulls are strong, right? If they're going to be able to put bars completely above the moving average, they have to be strong. And therefore, when you get gap bars, it never looks like you're going to get a resumption of the bear trend. But it happens often enough, at least 40% of the time. Here's an opposite example. This is from the end of June. We have a whole bunch of gap bars here, and it did not lead to a reversal or a resumption of the bear trend because the reversal up was so strong. So is today like this? I don't think it's as strong as this. And the bears are not as strong as this. So we're somewhere in between a very strong bear trend and a very strong reversal. To take the short, I think the bears need it to be perfect. If it's not, odds are there are buyers below and we'll keep working higher. And instead of a double top, we'll get a breakout above 57, maybe a test of yesterday's low and the 60-minute moving average. I compared this to that June 29th sell-off. Huge sell-off. Strong reversal up, but we still tested back down a few days later. And then we got a double bottom here, and then we rallied. So here's that June 29th sell-off, tested back down again, and then we broke strongly to the upside. Is this too early for a buy the close finish to make it to the end of the day? I don't know. Bar 71, it might make it. I think it probably will not go up all the way to the end of the day, so I think it'll probably stall. Big magnet, yesterday's low. My last buy was the 71 close, and I've already scalped out. Buy the close bulls in general get out about 4 ticks below the bull bar, and for the bears it's really not a good short. Typically they'd sell below a bear bar, 75, but I think it's too low down to take the sell. You can see we're testing the 15-minute moving average, but strong enough rally. Probably the best the bears get is this or this. Sorry about that delay. Stalling at the moving average, get back up to yesterday's low. We sold off 20 points, but we retraced more than half of it, and we're only down about 3 points on the day. So as bearish as that was, at the end of the day, it's not all that bearish. We still have 2 trading days left to the month. Again, like this big outside down day that we had here, June 29th, the end of the month, we have a close back up in the middle of the month. So bearish, but not as bearish as it could have been. Weekly chart, same thing. We have a reversal bar so far, closed below the midpoint of the month, but we still have another day. We have one day left of the week, and it looks like the fight tomorrow might be over the open of the week. Will the bulls get a bull body, or will the bears get a bear body? Let me just put a marker there for the open of the week. Monthly chart, 2 days left, but the odds are small that we're going to get much of a sell-off. The best the bears might be able to get is a close somewhere around the middle of the month. As far as selling this for a parabolic wedge at resistance and a buy climax, most buy climaxes end the buying and they don't begin the selling. So most of the time you get a climactic reversal rather than a reversal down, you go sideways. When you get profit taking like that at the end of the day, usually the bears are able to make money. So it probably, I did not take the sell. It's just not enough selling pressure here. But usually if you get a buy the close finish and a big reversal, big bear bar closing on its low, the bears taking that sell will make money because the bulls give up. The bulls do not want to buy that low. Some might hold on a little bit, but usually it goes down and up for at least a scalp. But this is too tightly up, and I did not take that sell. Weekly chart, right now we're right at the open of the week. So far neutral. 60-minute chart. Remember I said that if we get down here, we'd probably try to bounce, and the bears would try to get a head and shoulders top, left shoulder head, right shoulder, a lower high, major trend reversal. And it looks like that's what's going to happen. If the bears were very, very strong, instead of a single big bear bar here, we would have had 2 or 3 big bear bars. And instead, it's just a quick test down to the bottom of a week-long trading range. So not nearly as bearish as it could have been. First bar of the day, high of the day. At the time, you never know that. We had a lot of trading range tradings for 2 days, and we traded exactly up to the top of a channel, 1, 2, 3, and then we got a double top lower high and reversed down strongly from there. In general, when you have a situation like that, a lot of trading range trading yesterday, 25% chance maybe that one would end up the high of the day, and it did. However, we went always in long somewhere in here, so even though it's the high of the day, it became bullish soon after the reversal down. Our stop order bears, they could sell below 1, but probably, or they could sell the 1 closed, but we might bounce around the moving average. And then bar 3, I said that it's still always in short and sellers above. I tried to sell the 3 high, did not get filled, but it's not a very good looking sell signal bar. We got a reversal down, a pullback, and probably buyers around the moving average, especially after yesterday's trading range. So big tail on 2, bull body on 3, not all that bearish, and probably we're going to go sideways and have another trading range open. The bulls had another opening reversal at the moving average, just like over here, 2 legs down, and then a test of the high. 2 legs down and a test of the high. I thought we were still always in short when it went above 6, but I thought it was an okay buy for a possible low of the day. And then after the 4th or 5th bar, 9 or 10, it's probably always in long, especially once it closes above 5. But by then, there might not be a lot left to the trade. For the bears, a lower high below 17, second entry short, 14.17. Let me zoom in on that to make it a So a second entry short, but probably always in long, and the bears will probably need a double top, which they got, and they got a second entry buy 30 and then 32, but still always in long, and more likely will continue sideways, but okay for a swing short because the risk is not all that big. I thought we went always in short on 37. I had no idea that we would sell off 20 points from there. In fact, the chance of that is small, but I thought we'd go down at least enough for a test of yesterday's close and the 60-minute moving average. And at that point, it looked like we were not going above the high of the day. Since the range was only 4.75 points and it was likely to become bigger, after 37, we were probably going below the low of the day. And we still had a chance to have an outside down day, trade above yesterday's high and then below yesterday's low. And then it was sell by close. Big tail on 39, tail breakout. You can argue high 2, 2 legs down, 1 pullback 2, but strong enough down so that probably a minor reversal and either sideways or down. And you can see 40, a 2-bar reversal, but nobody wanted to buy above it. Not a good looking sell, right? A bull bar, sell climax, 60-minute moving average, but always in short. It's one of those trades that has a low probability of success, but when it does succeed, you can end up with a big bear trend, which was the case here. And then big collapse, 42. We went outside down. The one thing I thought interesting about 42 was the lack of symmetry. When you have outside days, very often it goes above the high of yesterday by a certain number of ticks and then reverses up from below yesterday's low at almost exactly the same number of ticks. And here we fell more than that. And also, it was a low probability trade for it to fall so much below 40. And therefore, even though it's a climax, we're probably going a little bit lower. For the bulls, they have a micro double bottom, 42. And you could argue parabolic wedge, 24 and 39. You can also argue that this is the second leg down, 1 pullback 2. But 41, 42 is, I think, a surprise. And that increases the chances that we'll get at least a little bit more down. And a bear inside bar, well, it's not an inside bar, a low one short, 44, With the micro double bottom, I thought there might be buyers below 44, but it's an okay short, at least for a scalp. And it turned out we started to sell off strongly. Big tail 46, but still sell the close. It's getting dangerous. We're getting consecutive sell climaxes here, here, here. And one of these bars is going to be the final bear close. You don't know which one, but because one of them is going to be the final bear bar, you can only sell closes at this point if you're comfortable trading small and scaling in higher. And tail 48, this late and a sell climax, probably just another 2 or 3 bars down before we get a reversal attempt. And 51, if you sold that 50 close, what do? Well, you got to put a stop up here, so you're risking, 14 points or something, and you have to be willing to scale in below a bear bar. I think we're always in long on 51. Experienced traders who did sell closes, they made a lot of money, and they avoided losing money if they bought the 50 close and traded correctly. We're always in long, buyers below, probably going higher. The bears who did buy the 50 close will look for a decent bear bar and then sell below it and then try to get out to avoid a loss. Okay, here we have a decent bear bar. So if it trades below that low, scale and bears who sold the 50 close sell more here. They're probably sufficiently disappointed so that they're not interested in making a profit. They're just interested in avoiding a loss. I'll try to draw it fairly accurately. They sell that close, they sell more below that bear bar. This is their average price. They would love it to come all the way down to the 50 close, but after this much of a reversal, 10 points up, the odds are the best they can do is avoid a loss. And it's reasonable to sell that close. It's reasonable to sell more below 57. And if you do, you probably are trying to get out break even at around this average between your 2 entry prices. Well, the bears, micro double top, 58, okay sell, probably will test the 54 low. So if you take the sell, you don't have to get out too early. We reverse up above 60, but right at the moving average and only a doji bar. Plus we have the magnet of the 54 low. So not a strong buy. And then 62, not a strong sell. Probably buyers below. I think we've seen the low of the day. 64, what do? The bears are hoping it gets all the way down to the 50 close so they can get out break even on their sell at the 50 close and with a profit on their sell below 57 or 59. But a lot of the bears will just try to get out right here, which is also a support level, the 54 low. And it looks like we're trying to get a higher low. It's a little bit of a wedge, down 60, up 60, down 61, down 63. A fairly tight channel. The first reversal up probably will be minor, and we'll probably need a test back down. But I still think we're always in long. Another test of the moving average. The bears made money several times here and then again here. And while it's an okay short, I think that we're probably always in long. And we'll probably try to form a double bottom 63 and then try to get back above yesterday's low. I don't know that we'll get there. That's a long way up. We may just stay sideways here. And bull bar 69, not high enough probability for a scalp, but an okay buy if you're trying to get a swing up to yesterday's low. Bears could not get below 70, and then we got to buy the closed rally. 74, do you get out below 74? Well, if it falls, 4 ticks below, maybe the range is big enough so some of the bulls will get out 5 or 6 ticks below, but I think it's okay to get out. And then below 79, if I were long, I would get out. But and sometimes, depending on context, I'll take that short. But I think the buying is just too strong. So this is one I would not go short. I would just get out of longs. And then we closed up back above yesterday's low. Really fascinating day. Stop entries below 1, low probability. Above 6, okay swing. And then below 17, probably a trading range. And then above 24, not all that good. 27, not all that good. And then below here we have a double top lower high, and we have a IOI, second entry short, still probably more of a trading range. However, we're failing to get above the high of the day. We know that the odds are high. We're either going to break above the high or go below the low. This is an okay short for a test below the low of the day. And then once you had 37, the odds were we were going at least a little bit lower. 40, not a great stop entry sell, but it worked. And once it works, you have to assume it's a surprise. You have to assume we're going lower. And 43, not a very good stop entry buy. 44, not a great stop entry sell, but we collapsed from there. A lot of times in trend days, I'll take a short below 44, taking a chance on the collapse. And today I ended up doing scalps instead of swinging down there, in part because I have other short positions in other markets. So I didn't feel a great urgency to add to my shorts. Buying above 50, I would not, but then buying above 51, I think we've seen the low of the day. So if you can buy above 51, stop below 50, and especially if you can scale in lower, it's a reasonable trade. Buying above 54, I think we're always in long, but we may get another leg or two down. And then selling below 57, I think we're always in long. It's a 20 gap bar short. I think we'll get down to the 54 low. Is that a scalp or a swing? It's probably going to be a scalp. Buying above 60, I think you only buy above 60 if your stop is below 50, and I would not take that buy. It's a doji bar right below the moving average, and it's sold off twice at the moving average here, 3 times. And then 64, I think we'll probably not go straight up, but it's an okay swing buy. And then selling 66, 67, it's too low down. I think we're always in long. I think we have support around the 54 low. So I would stop selling with stops. And then 68, now it's asking us to buy at the moving average, and the bears have been making money selling there. I think we're always in long. We could buy for a swing up there, or you could wait to see if we get a breakout and then buy higher. Consecutive bull bars, 71, 72. I think we're going at least a little bit higher. And for buy the close, sell the close, it was probably buy the close somewhere around bar 10 or so. Once you get 3 or 4 bull bars, the third bar 9 was a doji. The third bar 8 was a doji. But then we had 3 bull bars on bar 9, and I mentioned that every bar is closing at or above the close of the prior bar, and therefore we're probably always in long and going higher. So it is by the close there. You get out below the bear bar on 17, and still always in long. I'm not going to buy this close. It's too close to the high of the day, and until we break above the high of the day, we still have a chance of reversing and going below the low of the day. And then I thought it went short on 37, and therefore sell the close there. Sell the close 39. I would not. We're right at the 60-minute moving average, plus we have that big tail. And then big surprise bar 42. Might get a reversal up. There's some symmetry. We went 2 points above yesterday's high. We're a little bit more than 2 points below the low. Not a great sell the close bar. And then 46, 3 bear bars. It's sell the close, but you only take these sell the close shorts if you can manage correctly. And with the bars this big and the legs this big, you have to be willing to risk a lot. So sell the close 47, but a very big bar. So sell climax, sell the close 48, big tail. Probably the sell the close will end within a couple bars, 2 or 3 bars. Also in this segment, it's already the 5th sell the close bar. Usually you get about 5 or 6, and then you get a reversal attempt. And I thought 51, 52 were buy the close. And then trading range in here, you do the opposite. If you want, you sell bull closes near resistance, the moving average, and you buy bear closes near support, the 54, high or low. and then it became by the close again, 72, 73, 74. And, we're probably not going a lot higher at that point. Limit orders. I thought there would probably be buyers below 3, but probably closer to the moving average. And then after this rally, probably buyers below 14, but I'm concerned that we're so close to the high of the day, and we know we're going to break either above the high or below the low. We're so close to the high that I'm hesitant to buy the 14 low. I might have bought the 14 low, I don't remember, but you got to be really careful up here. And then here, what do you do above 21? Pull back to the moving average. I think we're still always in long, so you could buy above 21, buy above 20, buy below 21, buy below 20 if your stop is below 6. And then up here, the same problem here. I don't want to be buying with limit orders, and the bears were unable to sell with limit orders, did not get above that high. And then 39, probably sellers above, but you need to stop up here. 40, would you buy at the low of 40? I don't know, this is such a surprise that I would wait to buy. And then 43, do you sell above 43? I would not. It's okay for the O's and bears to get out, but if they do, they have to sell again below a strong bear bar, which is 44, and you're only doing that if you're willing to take a chance on a swing down. And we still fell for another 10 points from there, so the bears who did fine. Do you sell above 50? I would not. I thought it went always in long, so you buy below 52. And then up here, probably selling around the moving average with a limit order. I don't want to buy up here. I think we'll probably test down here. So to me, the buy zone is around the 54 low. Buy below 62, buy below 54, stop below 50. Here, gosh, I don't know. I think we're still always in long. Limit order trading, maybe buy below 66, but we're right at the moving average, and then we get the breakout. 74, you could argue buy the low, but we've already had a pretty good reversal, probably not going up much further. Really interesting day. Try to keep the questions short, because if they're long, they have a lot of parts, and it's hard for me to follow, and it's boring for people to listen. Good question. You said when bar 60 was developing, I'm looking to buy, but only if the selling is not too strong. That means I assume you don't have a limit order waiting at the bar 54 low. That is correct. But I did buy somewhere, I forgot how I bought, but I bought somewhere down there. So how do you buy? And under what circumstances? As you can see, I'm still struggling with limit orders. I think trading this after that is kind of an advanced thing to do. And I think it's better, to just, look at it and say, oh, that's interesting. I haven't seen one of these things before. Let's see how it plays out. And, I gave you that example of on June 29th. But the way I do it is, I bought on the 50 low as well. I think that's where I put up a 1 minute chart. It's been a while. I don't remember. I think I bought above here on the 1 minute chart. I said over here that we had ticks minus 1,000, usually not the low in price. Usually you get one more low in price at a higher tick level. The ticks are not as extremely oversold. And so I was looking to buy, and I'm pretty sure I bought above that bull bar. And I had a limit order to get out 4 points. But anyway, it's really hard to trade, and you have to make really fast decisions. And there are all kinds of ways to do it, and depending on how aggressive you want to be and how much risk you can handle. And sometimes, I see the stall 60. The bears are stalling. The bears are stalling again 62. We got a third leg down, could be a wedge. So sometimes I'll buy the 54, taking a chance on a wedge. Sometimes I'll buy 64 as soon as I see a bull close somewhere in this middle. Sometimes I'll buy above 64. I'd rather buy above a bull bar closing near its high, like above 65. And because a trading range is likely, at that point, I'm scalping, although a trader could swing trade for a major trend reversal. Bear trend, strong reversal, higher low, a wedge higher low. But probably we had to go sideways first before we could go up. So, there are countless ways to get long. They all require greater risk than what most traders want. And it's usually better if you can use wide stops and scale in. And that makes it very, very difficult, if you're starting out. An alternative is to put up like a 15-minute chart, and you can see, we tried to reverse. Now we got a bull bar closing on its high. You can buy with a stop there, put a protective stop here or here. If down here, you're still risking, 8 or 9 points. And most traders just can't do that. And it's just too stressful. First of all, it's too much money. Second, it's too stressful. And third, if you take the buy and it starts to go against you, you'll find yourself exiting before your stop is hit, but before the reversal back up. So you end up taking a loss of 4 or 5 points. Yet, if you relied on your original stop, you would have made a lot of money. So there are all kinds of things that can go wrong. But I'm just watching tick by tick by tick for signs of hesitation around the 54 low. Could I have simply put a limit order to buy the 54 low or a tick above and a stop down here? Yeah, I could have done that. That would have been okay as well. In general, if you're starting out, it's better only to look to enter with stops and preferably above decent looking bull bars. So 64, maybe 65 better. 69, not a great location, but we're still always in long. So you can buy above 69, stop either below 63 or below 50 and take a chance that you get the swing up. And, this is one of those days when you did, but you don't always. Okay, so good day for the bulls after all, right? Yes, we have 3 consecutive bear bars, but the bulls closed the day back above yesterday's low and above the midpoint of the day. So, remember I said I thought we would do this, and today is similar to this, and we went sideways here for a month. You can see after a few days up, we tested back down. I think if we do go sideways to up for a few days, we will test back down again. But, the bears did a lot to erase, the bulls did a lot to erase the bearishness. And I think, we're pretty much back to neutral. Weekly chart. Tomorrow it'll be interesting. The open of the week, I think, becomes the key price. Will the week close below the open and have a bear body, or will it close above the open and have a bull body, in which case it would be a weaker sell signal bar on the weekly chart. Okay, hope everybody has a good night.